Design Arena, they posted a weakish set of numbers. The profitability was down. There was a steep contraction in the margins as well to around 16%. Well, let's understand what went on in the past quarter and the way ahead from here on. Mr. Arun Jain, Chairman and Managing Director of the company, joins us. Hi, Mr. Jain. Morning. Thanks so much for joining in. Well, give us an outlook first on margins. You have been talking about 20% for FY23. At the half-year mark, you're okay, but the past quarter is a little bit worrying. So what's the outlook on margins, if you'd give us a sense? Was there any impact of Forex? That's why it's come down so much. And when do you hit that $75 million per quarter?
Yes, I think I'll answer you all the questions. So thank you for remembering all the numbers, what you are asking me.
It's our duty, sir. It's our duty. We like to give our viewers the best. Go ahead.
Yeah. So first of all, I always mention it's the last 12 months, which is important for a product company like us. So quarter-on-quarter numbers are not the right metrics to be looking at it. But for this quarter, specifically, if you are looking for the margin, there are two reasons. One is $6 million movement in the, one is $2.9 million on the way we move from our product business to a platform business, which is resulting into a not immediate booking, but we booked 4 orders, and those orders translate into $2.9 million if it would have been like-to-like license revenue. And there are $3.1 million which has got shifted, where we won the order, but contracting is not completed before 30th September. So if you put that in context, I think we are in the same number, around 125 crores of EBITDA would have been there if all of it would have been there.
Right. So
looking at the,
Go ahead, sir.
Yeah. So looking at the numbers, which are just 27% on year, our significant move which happened after December Technology Day was to platform, and the platform business is very, very healthy. We grew 62% on platform revenue in last 1 year, and that's a very significant shift for a product company when it becomes
Mr. Jain, Mr. Jain, we like a couple of numbers. So you're saying that you hold on to the margin guidance of around 20% for the year. Just want to confirm that.
Right.
And also, when do you hit $75 million per quarter? I think you were guiding for that, right?
Yeah. It should be we are on a ballpark distance to $75 million.
In the next quarter? Quarter 3?
Next Q3 or Q4.
Okay.
Definitely Q4. Yeah.
all right.
So that's right.
Okay, take that point, and the first half you've done what, 24% revenue growth. You had guided for 20%.
Yeah.
Just wanted to know if you want to up that guidance, because some of the revenue spilled over into the third quarter, like you said. So is there likelihood of you doing better than 20% that you've guided for, given you've done better in the first half already?
Yeah, the market is not, I think we need to understand that inflation and the European market is making the decision slow down process. And as of now, there is uncertainty of the closure frequency. The pipeline is very healthy, $800 million pipeline is there. So, but closures taking longer time because of uncertainty in Russia-Ukraine war and high inflation rate. So these are two basically factors which is the headwinds in the. Besides the tailwinds, what we have, we launched 3 basically we call wide window movement in the technology company. Our AI business is driving us 3 platforms we could able to launch in 1 quarter, and each platform is competing like ESG. We won the deal on AI from one of the largest European banks. Is a landmark deal from the perspective of the people who are investing hundreds of millions of dollars in Silicon Valley, and we are winning against them. Is a very big wide window moment for us.
Mr. Jain, that point is taken. Actually, your deal pipeline looks very good. It's a 5.5% growth, and at 6,500, I think it's the highest we have seen. It's a new high for you. That point is taken.
Yeah.
But it looks like your costs are also growing. Your EBITDA is down. I mean, will this pressure continue?
Yeah, I think we guided in April, if you remember, the 3 T's are affecting our PAT margins. One is travel, which was not there last year, talent, and the tech. So now travel has got stabilized in these 2 quarters. So now there will not be incremental travel costs, but when you're looking from year-to-year comparison, there is a substantial increase in travel cost, which is impacting the margin, and tax cost 26% is significantly larger than 16% last year. So those are the 2 elements which are, and talent costs, all of us knows that every company has to go through a talent cost increase in IT.
Has it stabilized or it continues to be higher, talent cost?
I think it's stabilizing now, another 1 quarter maybe. So it's just a question of one or two more quarters. Industry is coming to the reasonable level now and rational level, I would say.
So the worst of attrition and, those pressures are behind is what you believe?
Yeah. It's definitely from July onwards, it started coming down, and with a lot of other companies not showing the same kind of a...
So can you give us an EBITDA guidance? Because, I mean, revenue is good. It's not translating into EBITDA at the level that the revenue is growing. Any EBITDA guidance at all?
20%.
Yeah, that's what we are looking at. For the whole year, we should be able to do 20% plus.
No,
EBITDA.
margins. I was looking at a whole number, if you have. Okay.
Okay, I mean, you want actual numbers or what is it?
Yes, actual number.
An actual number is difficult to
range. Okay.
Yeah. A range of 20% plus on EBITDA margins, that's what we are saying.
All right.
20% growth and 20% EBITDA margin.
Just a quick one from a long-term standpoint. How much do you think the platform business should contribute to your revenues? Because that is a higher gross margin business for you. Currently, it's about 20-22% in the second quarter.
Yeah. I think in a long run, 3 years perspective, we should be contributing almost 40% of our business should be platform business. It's a very healthy pipeline is there in that business. It takes longer time to book the revenue from there.
All right, take that point. Thanks a lot, Mr. Jain, for joining in. You are holding your 20% guidance for the margins and 20% plus revenue growth for this year, and 40% revenues coming in from the platform business in 3 years. We will hold you on to those numbers. Take a short break. On the other side, we'll get technical calls coming in. Mitesh Thakkar as well as Sudarshan Sukhani joining in.